Well, it is really lovely to meet you, Piers. Lots and lots of people, of course, are going to be familiar with you for a variety of reasons, including Dragon's Den and The Secret Millionaire. But of course, you're an entrepreneur, you're an investor, you're also a content developer, you're a YouTuber, and there are many, many more strings to your respective bows. So would you mind telling us a little bit about you and the journey that you've been on?
Yeah, I'm a struggling YouTuber. So my background's quite varied. So my background's professional. So I'm actually a venture capital lawyer by training. That's where I started in the city. I grew up in the north of England, so it was a bit of a challenge for me to get into the city, but that's a whole other session we could do another day. And I became a banker at Credit Suisse. So I was an M&A leveraged buyout specialist, cross-border as well. And then my first sort of I've always been in business really, ever since I was like 13. And I had things when I was at law school, at university, always doing something on the side. Even when I was at Credit Suisse, I was doing things on the side as well. And one of those became a .com. So I was in the first .com wave, and I made my first money there after that, because obviously there was a bit of a bust, which was actually bringing hedge fund money from the US into the UK and Germany for structured investments into small caps. And then I made a bit of money out of that. And then I was always investing in businesses, and they got bigger. And I ended up sort of owning a couple of businesses, tech businesses, or investing in them at least, and in some cases owning them, and mobile telecommunications. And so my business interests have always been technology, some media, and telecommunications, and especially the convergence of technology and communications as well, which is quite apt now. I spent 10 years of my life trying to sell, video conferencing and unified communications, and nobody was struggling to get people to adopt it, and now here we are. The Zoom boom.
Yeah,
so
the struggle is no longer
10 years too early on that one. And then I'm on the board of British Business Bank, which is the government development bank in the UK. So we're now the biggest investor in small businesses and high growth businesses in the UK, up to about, what the number is, I'll probably get it wrong, but it's over 80 billion now in terms of financial support. I was a secret millionaire on Channel 4, and that really my profile grew as in business, but also I'm sort of mixed race. My mom's from Barbados, my dad's English, and there weren't many people sort of like me to be role models. And I was a role model for the government, and I was spotted to be a secret millionaire, which I did in 2011. And from then I became a dragon on Dragon's Den, which I'm probably best known for. And because of the COVID pandemic, it was back on TV last year, so it was as though I never left. That's been quite interesting. But I'm still very much an entrepreneur, so I'm still sort of just about literally in the process of raising finance to start a business, which is focused on small businesses, helping them to embrace technology and to be successful. And I've also got other interests. I'm involved in Accelerator, the Scale Up Accelerator, which we can talk about as well. So I've got lots of fingers in different pies, but I think about me is I've sat on kind of every side of the table almost. So I think I have a sort of useful perspective for people, no matter what you're doing when it comes to, growing a business, starting a business, or scaling up a business.
In a recent interview, Piers, you were quoted by saying when you were 25, you were earning more money than you could spend. And yet then at that stage, you decided to go and, become entrepreneurial and to, if I'm right, leave the corporate world around about that time. So have you always been global and scalable in your mindset, or how did your mindset pivot along the way?
So I've always wanted to do something where everybody told me that I couldn't. So I grew up in Lancashire. I went to a comprehensive school, and I wanted to be a lawyer. I wanted to go into business, and everybody said to me, I'm not sure what that means, but probably need to become an accountant. And I thought, oh, no. And I quite like law. I did a law A level, and I became a lawyer. And I said, oh, I want to be a city lawyer. And everyone said, you can't be a city lawyer. You didn't go to Oxbridge and have all the right school time, all that good stuff. Changed since then, but you get the idea. And I managed to become a city lawyer. And then I realized I didn't want to be a lawyer long term. I wanted to be an investment banker. And everybody said, you can't become an investment banker. So I've always had that kind of mindset that, oh, that's interesting. I want to go and do that. And no one's going to tell me that I can't. Now, not everybody's built like that. I didn't have the social capital that would have made my life a bit easier in terms of that journey. And that's something I'm trying to change personally now in terms of my sort of philanthropic interest and the time I spend. So I've always had that mindset of I can get it done, which has worked out in many cases. In other ways, I've been perhaps a bit sort of not complacent, but belligerent. I think I can keep doing that. I keep putting my chips on red. And sometimes they come up the wrong color, and it hasn't quite worked out. So that's been me. And now what I try and do is try and help people from any background really to try and do what I did to the extent they want to, without making the mistakes, or at least understanding how to overcome the hurdles that I faced. And I often faced them, but didn't realize I faced them because I was kind of blind to them. I just sort of
Was
found a
that
way around
beneficial?
them. Yeah, but not everybody's like that, are they? Not everyone's built like that. It just
Yeah.
happens to be my style.
And you particularly mentioned there about the social capital, and the fact that you mentioned that you didn't have it, and now, as you mentioned, that it's something that you really wanted to change. How did you build it? And also from the point of view of the audience, how does anybody build it?
Social capital is really important, and social capital, it's inextricably linked with access to economic capital, financial capital. I'm a young, kids now who are sort of early teen. They say, "What do you want to do?" And they taught me through this kind of life plan, and they're going to start a business, and they're going to raise a seed finance and a Series A and sell it to Google and buy an island. And I'm like, wow, I didn't know any of this stuff at all. But they have these access to networks, and they can be hard networks, where the parents are connected, or they understand, or they went to the right school, or they can be soft networks. It's just the way in which the people around you think. And that's really important. And a lot of people, especially the background that I came from, that didn't exist. So I had to create it. And I created it partly by, getting a job in the right place. So for me, it was very hard to get into the city as a lawyer, a bit like an egg timer. And once I got through that restriction, I became a city lawyer. And people stopped asking me what school I went to, or what did I get in my A levels, or why did I have to do my A levels twice, things like that. So I kind of built it up through my networks, which are really, really important. And I've invested a huge amount of time in networking, and that's something I've sort of learned. It's a skill I've had to learn, and over time, my networks have overlapped. So there might have been finance or tech or whatever it might have been, and they've overlapped. And a lot of people, they try and build networks, they try and do it online, which is fine. But a lot of networks you have to build with people. It's about relationships and spending time with them. We can't underestimate the value of social capital, especially about understanding where the financial capital is.
Now, on that note, I was particularly struck, your Ask Peers, your hashtag Ask Peers content series that you have on Twitter and that you answer on YouTube. First of all, I'd say to anybody listening, it's very, very good. But it was just interesting. In one of them, you were distinguishing the difference between debt and equity. And you said particularly the difference with equity is that you're engaging in a long-term relationship. And you were at pains to tell the audiences that that's a very big difference, because eventually with debt, the relationship ends unless you restart again. But that's not necessarily the case with equity. What has been your experience of building those relationships with an eye to those long-term equity interactions?
So I've raised equity personally. I've raised debt. I've raised venture debt as well, which is kind of interesting. One in the middle for people don't understand what venture debt is. It's kind of you're raising money, they're taking a bit more risk, so they expect more upside. So typically that's in the form of equity and maybe a higher coupon as well. And my experience has always been that it's hard work. That's the key thing I'd put across, is that even now today I'm raising equity. I mean, yesterday I met two of my literally angel investors in my new business. And we're talking about raising the rest of the capital, and my network is a great network, but it's still tough. It's still hard, and people don't often understand the difference between, believe it or not, debt and equity and everything in the middle. And I think that the good news is the world's becoming more complex in terms of the availability of finance. You've got, crowdfunding, you've got different types of venture debt, you've got asset-backed lending now. You're now looking at lots of people that are able to finance your business based on your revenue, be it sort of your sort of credit card income or recurring revenue. So that's becoming quite interesting. So the world's expanding in terms of options, and the key to it always is, no matter how complex they are, is understanding your options, is the point I always make, and trying to push your round peg through a round hole. There's no point trying to push your round peg through that myriad of other different holes of financing options if you don't fit, or because all you're really doing is wasting their time, but more importantly, you're wasting your time.
And also in that piece, though, you also spoke about, if people tell you, and people often do, is that equity investment means far more than money. It means access to their respective networks and so on. Would you encourage people to be critical of that? Is to really do your due diligence? Just because, let's say it's me, let's say that I'm telling you that if I invest in your business peers, I'm going to bring X, Y, and Z, is that you ask people to really go and investigate if that's the case. How do people do that? How do you do due diligence on the other side, on the investor yourself?
So you hear a lot of investors will say that they will bring something to the table, and that's a real spectrum. You know, you've got to be really careful about that. So if you're taking money off, you know, Andreessen Horowitz or some West Coast fund like that, they probably are going to add some value just because of who they are and their networks. If you are talking to a group of angel investors who they really know the industry, they've got a background in that sector, and they've exited businesses, they've built businesses similar to yours or in the same sector, they can potentially add value through their know-how and their networks as well. But quite often, people will try and sell you their value add because they want to get a better deal out of you or a better valuation. And I think that's where you need to do your homework, because quite often you will find that once the paperwork's signed, is that it's actually quite hard to extract that value out of people, not because they don't want to give it to you, they're just busy, they're distracted, or your timing's not their timing. So the other point about equity is, or any investment actually, is that people sometimes they want to get involved, they want a board seat, they want to have some kind of oversight, governance, or veto right or consent right. So it can boil down to actually what's in your shareholder documentation, and be very careful that no matter who it is, they don't have some kind of control over your business, or a control over the decision making, you know, or any more than they should have, given what they've invested. And that's really important. But if people say they're going to add value, then try and structure it in a way, maybe through a consultancy agreement or options, where they kind of earn their equity, they earn their worth, rather than promising you something, getting a deal, the ink dries, and you never hear from them again.
Very good advice. It really is, and you know, it's so clear that the lawyer is coming to the fore in you here.
I've seen it on both sides of how that
Yes.
works.
Yeah, but you know, it's great though, Piers, that you're not just saying here's what to watch out for, but here's how to watch out for it and structure it accordingly.
Yeah,
but
yeah. Often it's not people trying to be clever or malice. It's just that it's busy. You know, the people are high net worth individuals and other things to do, and the day you call them, it's not available, and you can become quite frustrated by it. I've seen a lot of entrepreneurs become very frustrated by that because they were promised something that didn't surface.
And is this exactly why an accelerator like your own Scale Up Accelerator works, is for that inside track, for that sense of here's what you need to do, you know, line by line as you go along?
Yeah, so the Scale Up Accelerator is run by myself and an old friend of mine, Ian Merrick. The idea there is we've been quite focused. So you might hear lots of accelerators or incubators, lots of different names. You've got to be quite careful in terms of nomenclature and what it actually is you're getting involved in, and especially if they're asking you to give up equity or for access to office space, some kind of commodity. Be careful about that. But we've been very, very focused. So the Scale Up Accelerator is very focused on B2B software as a service. They're raising, you know, 1 to 1.502 million pounds. They've already raised finance before. They've got some recurring revenue, so they've got some proof points. And now they're at a point now where it's like a Series A round, really, where they're at a point now where they're ready to scale up. They've proven the hypothesis. They've got some traction. They've got some customers. They've got a team, and they're ready to grow. And that's what we're focused on, and very much on that kind of B2B software as a service sector, because that's where our sort of specialism is. And also that's where our network happens to be as well, in terms of the investment community.
I could imagine though, Piers, I could tick all of those boxes. I could be B2B, I could be in recurring revenue, I could have raised finance already, and you haven't specified yet whether that would be debt or equity. But yet the business may not necessarily be scalable. So can I ask you, what do you look out for? What's your indicator of scale? Is it ambition? Is it business model? Is it both? Is it something else?
So two things that we look at is, one is the fact that you've got some recurring revenue. So it's typically, you know, £500,000 to £1 million of annualized revenue. So what you've proven there's a demand for your products or service at least. So that's the first thing. You've proven that people actually are willing to pay the price you're requesting for that product or service. And then it's a question of how can you grow. So, you know, if you look at the Scale Up Institute, for example, the way they define scale ups is the OECD. So it's sort of 20% growth in revenue or employees. I think for a venture investor, and really where we're looking at that kind of Series A in B2B software as a service, you're looking at venture investors, and they're looking at, they want 5, 10, 20 times their money. So you are looking at a growth rate, you know, in excess of 50% a year, but you're probably looking, or even 20%, but it's going to accelerate. Hence the reason for the finance. That's what they're looking for, and you've got to be able to show essentially that there's an addressable market of a certain size. You have the product, you've proven the proof points, you know that your acquisition cost for customers is X, the lifetime value is Y. And if that if that ratio stacks up, you then know that if I'm spending this much on marketing and sales and marketing, and I generate this much, so this number of customers paying this much, it can grow at this rate. So a lot of it can sound quite formulaic, and in some cases it is. That kind of CAC LTV ratio is really important to a lot of investors. But then once they get past that, they're looking at you, the team, the founders. Can you execute? And do you actually know what you're doing? And will you be able to, deliver return on their money if things change, which in many cases they do?
You mentioned there about the total addressable market. That's often a really theoretical figure where you go on to a market research report, find two figures, multiply them together, and have some spreadsheet gymnastics. What really is the difference between someone who plucks it out of the air and someone who has something that an investor will really listen to? Because they can seem quite theoretical questions.
You just described investment banking there. so my first .com, my model, literally, I'm not making this up, was the total market, the market's X billion. If we get 1%, here's our revenue line.
Yeah, I mean this 1% of billion.
Yeah, I mean, yeah.
So yeah, but people roll their eyes at that. Like, what do you need to do in order to make that realistic? Realistic on both parts.
So I think that people they can get obsessed with the numbers. And I think you can get to the point often where it can be garbage in, garbage out. So it's about realism and to show you that you've done your homework. So to show that, yes, so a good example, so the business that I'm starting, okay, so there's a total addressable market of small and medium-sized businesses, okay? There's 5.7 million of them. So that's my starting point, but I can't go after all of them. So
do you mean 5.7 million of them in the UK?
In the UK, sorry, yes.
Okay.
Yes, I'm talking about the UK now. I can't go after all of them because some of them have, 500 employees. I'm not interested. I'm focusing on those up to, 10, 15 sole traders. That's my market. And even within that market, I'm sort of, cutting that down into markets where I may market to them in different ways. So sole trader is very different to somebody with 5 employees or someone with 10 employees in 2 locations. So it's about really just showing that you've done your homework. But for investors, that once you've done the homework and you've spiced and diced it down to market, you think your go-to-market strategy actually connects with. No point having a huge addressable market and your go-to-market strategy, your marketing strategy has absolutely no way of connecting with it. And that's quite patently obvious. So the go-to-market strategy connects with that kind of market. And that's what investors want to see. But they want to see, depending on how much money they're putting in, when they're putting in terms of your where you are in your sort of growth journey, is how much of that market can you actually close. And that's what they're looking at, because that will then give them a guide as to what this business could be worth and will it generate the return they're looking for in their particular fund. And different funds are looking for different returns. I've got a business I invested in, who were looking at exiting, pretty soon, I think. And they are, it was a tech investment, probably a 50x return. But the people investing now who are kind of doing a quasi buyout, part buyout, they want a 3 times return within 5 years. Very, very different. So understanding that's really important. And again, it goes back to my round peg, round hole. No point talking to somebody who wants a 100x return and is willing to be a first check investor if you're pitching them a 3x return.
Piers, going back to an earlier point that you made, you were asking there the whole idea relating to an ability to execute. Now, I'm sure as an investor, you might be looking for that. Indeed, even as somebody who might be considering who you're going to accept on as an accelerator, you might be wondering that. But for our audience today, how can they determine themselves if they have that ability to execute? Does it come down to hunger, experience, something else, combination of everything?
Yeah, it's a tough one. It's a very common question, isn't it? Is it are entrepreneurs born or they're bred? And I think it's a mixture of the two. So I think in some cases, people have that sort of a natural ability to take on more risk. And let's face it, building a business does involve risk, financial risk, but also personal risk as well. And also, can you learn along the way? So you hear about serial entrepreneurs. The serial entrepreneurs are people that they build other businesses down the line because they've learned along the way. They made all the mistakes in their earlier businesses. But the military, my former chairman, who's an old friend of mine, Sir Ken Alissa, he always said to me that, the military, they train people to be leaders. And it's absolutely true. It's a particular kind of leader, but leadership can be learned. And I think that when you're starting a business, I was a dragon on Dragon's Den, and you see people walk into the den and we tear them to pieces because they didn't understand their numbers or they fudged something. And I think that's TV. The reality is that you need to be cognizant and understand what it is you're good at and what it is you're not particularly good at. And that's where governance and having external people working with you, be it a board of advisors or just in your family, looking at you objectively and saying you're not very good at that. And that's where you need to fill the skills gaps. And that's when you build a team around you. At no point, if I had a team of Piers Linneys in my business, it'd be a recipe for disaster. I can tell you that right now. I've got people in my business that are much better at doing what I want them to do than I ever will be. They've actually, in some cases, they've forgotten more about doing that than I'm ever going to know. And that's what I'm looking for. So I think that if you're an entrepreneur, you should be aware that you are going to have to be a leader, and you should gen up on that. You can read books about that and think about it. But often in a small business, it's really about people. It's about, can you inspire a team? Can you inspire people to join your team and to potentially join and earn less money than they might earn less somewhere else? Can you manage them? Can you inspire them? So some of that you can learn, and some of that you'll have to work out how to do it yourself. And if you're an introvert or the kind of person that struggles with that, then find someone that can work with you, a co-founder or an advisor or someone else on the team that can help you with that. Because I've worked with lots of, I used to run a tech fund, very 2000 vintage, and a lot of them were spin outs from universities, and they couldn't have a conversation. They were introverts, they were PhDs, but over time I saw them evolve into very capable CEOs.
And actually, you mentioned something and you just jumped right over there, but I think it's something that's often under talked about and under considered, and that is simply taking time to think about it. That's been my New Year's resolution for this year, by the way, is I spend an hour every day thinking, and I start my New Year's resolutions in the middle of December so that I've a chance to fall off the bandwagon a couple of times. But I think that that's something that's really important, and you've just mentioned there, Piers, is just taking the time to think through these things can often be very beneficial. Like you mentioned, a lot of people are very busy, and taking that space out can be key.
And also listening. So something I've learned along the way is that I used to, think, well, this is the plan. That's what I think we should do. Let's just go charge. And now I've learned the hard way in some cases, very expensively in some cases, to listen to other people, because they will have insights that you won't have.
Really and truly good advice. And on that note, actually, you are offering a prize today for one of our lucky viewers, which is they are going to get access to one of your courses. Do you want to just tell us a little bit about that?
Yeah, so I get asked for advice everywhere I go. It can be, I can wake up on train, someone's written a business plan on a napkin, that has happened. Restaurants, the street, wherever I am. And often I get asked the same questions, and I find that quite frustrating, not because people are asking me the questions, because I can't kind of almost scale up myself. So I started to create a course. I thought I'll make a few videos that cover some of these basic questions. And me being me, that turned into 76 lessons of 7 to sort of 20 minutes long. So 10.5 hours of content. And that became a course. I call it Startup with Piers Linney. And the idea is that it's to help people, like we just talked about, actually, to almost become, start a business as if you've done it before. So that's the idea. So it goes through everything from, your mindset, health and wellness. Should you start a business? How do you incorporate a company? All the way through to go-to-market, marketing, hiring people, firing people, strategy, selling a business, M&A. So I try and cover all the ground I possibly could within reason. It's like having 200 of the proverbial coffees with Piers. So hopefully it adds a lot of value. So I get that great feedback. So I'm going to give one of those away today as a free prize to anybody. And that's for anybody really starting a business, or anyone thinking of growing, reasonably new business, so who's never done it before.
You were reflecting a little while ago on your time in the den, and I noticed in that reflection that you did, the things that you really like to see in terms of a pitch is clean, straightforward, and where someone knows exactly the value that they're offering. But you also spoke about your pet peeves. So you said, for example, products that don't really solve a problem, crazy valuations. But the other thing you said was people who are poor communicators. And people might worry about that, Pierce. What is a good communicator in the context of, getting ready to pitch, or considering if they're going to be investor ready, or again, applying for accelerators? What do you suggest to people who want to upskill in terms of their communication?
Phew. So I think the first thing is, it might sound like it's not relevant, but understand your audience. So, it's very different talking to a institutional, professional, VC, venture capitalist, investor, than it is to say your neighbor who's thinking of investing because they like you and they're quite like the business idea and they used to work in a sector 20 years ago. Very, very different audiences. So first, understand your audience and try and work out what will resonate with them most. So it's find that common ground, that common denominator in many cases. And the other one then is to practice. So even now I do a lot of public speaking, and even now I get sort of the cold sweat sometimes before I have to do these things, and I practice. And when you practice, it helps you, you still might be nervous, but it helps you understand where you may have gone wrong and what you were concerned about where you may go wrong, and you kind of get over it. So practice your pitches, practice your public speaking, or practice speaking in front of your team. That's something that makes you nervous. And the other thing that it is just to have the confidence to, the third thing is tell a story. So especially if you're looking at raising money, people want a beginning, they want a middle, the challenge, they want you to overcome that, and they want an ending. That's a good story. And that's what you should think about when you're telling almost anything, even your sales target sometimes, but especially when you're pitching a business. And the last one really, I think, is just have the confidence that, nobody knows your business better than you do. Nobody's more passionate about it than you are. And you can tell that story better than anybody else. And you'd be surprised about how much people want to listen to you. So have the confidence, actually, that what it is you're saying, what you're doing is interesting to your audience. Because often when you're speaking to people or pitching even, it's the fear that, I do it myself even today. You're talking to an audience, somebody starts looking at their fingernails and you just think, oh God, they're bored. And later you'll say to them, oh, I'm sorry, it was a bit boring. They're like, no, it's fascinating. It was one of the best things I ever heard. I even took some notes. Like, really? So have that confidence in yourself that, whatever it is you have to say, people do want to listen to.
And as we do wrap up this conversation, Pearson, I'd say nobody, don't worry, is looking at their fingernails right now. But as we do wrap up this conversation, what would your top three things to do for this audience today in areas of thinking big, avoiding a mistake, and a Pierce Linney special?
So one is think big. So you don't have to think big can be is subjective. Big that you're comfortable with, that works for you in your business and the market you're in. But think big though, because business is a game changer. It's exciting. It's about creating wealth, create opportunity, jobs, ambitions, careers, dreams. That's what it's about, actually. And I think the world is moving towards people becoming more and more masters of their own destiny. That's number one. Second one really is well, I actually made another YouTube playlist actually on my YouTube channel, Piers Linney TV, about how to scale up. And I had 5 factors. So one was planning, one was about operations. So being ready to scale your business up, being ready to grow, getting your ducks in a row. So I always say, unlike a pantomime horse, that your front end of sales and marketing doesn't detach from your back end, then you can have a serious problem. I always say, I'm kind of mixing the peer special in here as well, by the way. Mm-hmm. I always say that technology, so UK businesses are far less productive than they should be because they're not embracing technology. Partly what my new business is focused on. So absolutely automate whatever you can, reduce that overhead, reduce that inertia, reduce that friction, so you can focus on the business of, getting on with running your business. Understand your financing options. We've talked about that. So whether it's debt, equity, understand really what your options are and where you fit best and how you approach that particular universe of investors. So understand your audience, going back to communication as well. So if you sort of put that all together, the last one, the final one on the top, the keystone is people. So be really, really careful. This is the Piers tip. Be really careful about who you hire, when you hire, and how you hire them, because your team is absolutely critical to your success. And it can be very easy when you're starting out just to hire whoever's available. And it's like if you go to university, you spend the first day meeting lots of people, and you spend the next 3 years trying to avoid them. So in your business, don't get into that situation. Try and hire carefully, and try and hire as if you've got the budget and you're hiring people as if you really want them to stay for as long as possible. Now, people don't these days, people change, chop and change. So the last point is, when you do hire people, bring them on board, structure your compensation, especially equity and options, very carefully, so that if they do leave, that they get a fair interest in the business, but they don't leave with too much. So all of that, I think, adds up to a reasonable roadmap to growing your business.
Well, I mean, you've given us great value for money for your top 3 tips there. And Pierce Linney, it's been an absolute pleasure. And thank you so much indeed for joining us.
Thank you for having me.